Oh my God, guess what Rachel Reeves is up to now? Yep, slashing the allowance for the cash ISA. It's back on the table. Now, don't even get me started on what I think about this constant tinkering and how difficult it makes it for diligent savers to actually plan their finances. But don't panic, because here are some smart moves that you can make. So the Financial Times reported this morning that Rachel Reeves and the Treasury are considering slashing that cash ISA allowance from £20,000 to something much lower. The figure of £10,000 has been put on the table. And the idea behind it is to boost growth, get money into stock markets, and encourage a culture of investing. But for many people, cash ISAs are the default safe place to store money. And if that allowance is trimmed, your ability to shield interest from tax might shrink. And on top of that, building societies are warning that cuts to cash inflows could increase borrowing costs. Okay, so here's how you can take control. Here are 4 options worth considering. Firstly, keep cash inside a stocks and shares ISA. Some platforms will let you keep uninvested cash inside a stocks and shares ISA, and you can earn interest on that. You can get up to 5% interest at the moment, but head to the link in my bio for more information on that. You can move your cash into a stocks and shares ISA and invest it, and that's a great option if you can afford to lock your cash away for 5 or more years. Putting money into equities or funds can often yield greater returns. However, that does come with more risk. Thirdly, you can move it into low-risk money market funds. So within a stocks and shares ISA, you can access cash-like investments. They're known as money market funds, or you can do short-term bonds. And those aim for stability, but slightly better returns than you would get just from interest. And lastly, leverage your personal savings allowance. Outside of an ISA, some people can still earn interest tax-free. And for basic rate taxpayers, that's up to £1,000 a year. And here's a little bonus tip. If you already have a cash ISA, consider transferring it. But make sure you're using the proper ISA transfer routes, because better providers can offer better interest rates. So make sure that happens before this change hits. As always, nothing is set in stone yet. We could be looking at it in the budget. But if you wait until the last minute, you might miss out on opportunities. So you may want to look at repositioning your savings under the current rules. I have got all of the best rates for cash ISAs in the link in my bio, so head there.